This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe. Welcome back. We're going to do a stock market update today, go through the market conditions. Had a shift in something pretty important, definitely worth talking about. And then we're going to go through all the trend and momentum as well. Let's go ahead and get started. As I've mentioned, I am working on a new course to go with the trading bundle that I have in place right now. When I do that and finish it and put it out there, I am going to change the pricing, so I just wanted to make you aware. My suggestion, though, if you're just getting going and found the channel and you're interested in how I'm looking at things or how my approach, I would start with the book. I am offering and I'm still keeping it at a discount right now. You can go to rabilstockresearch.com/book for more information. Okay, let's get right to the heart of the matter and start out with the sentiment and look at the jump. Now, remember, 2 weeks ago, this was at 29%. Now, that's the difference between the bulls and the bears. And so the difference has jumped in 2 weeks from 29% more bulls than bears to 41% more bulls than bears. It's a big number. It's one of the biggest numbers this has seen since like 2021 or something like that. The bulls are up in the high 50s, like 57 or 58. It's and this is Investors Intelligence Sentiment number. Now, remember, what we're looking for is when people are getting too bullish, right? If we get too many bulls, then we want to think like a contrarian. So the higher this number goes, the more risk there is. When it's above 35, we reach a level where we need to start paying attention. When we're over 40, you start to feel a little uneasy. If you get over 45, then you start to get incredibly uncomfortable. All right. That's how you should be thinking about this. Right now we're in the 40s, but to go along with that, we've got this RSI 5 on the weekly, and we can see that we made this push up and then pulled back in price and then made another new high. This made this push to the upside, tried to go back and, even get to midpoint, didn't do that, and now is making a lower high. So we're getting a lower high here and a higher high here. Now, if we go back and look at what happened back last year, we had the same sort of pattern develop. Now, I'm not trying to say that this is the same thing and it's going to play out the same way, but the conditions are similar. So we need to be aware, especially being right near this big round number, 5,000. So anyway, just something you want to be on the lookout for. We got both of these in the negative camp. All right. So the fact that they're on the negative side tells us we should be on the lookout for a pullback. And the fact that we've got divergence sort of saying the same thing. Now, these aren't market calls where we're looking for some big drop. All right. We need to have more problems developing here. All right. So, but this is a big deal. The sentiment jumping up like that, I think, is something we need to pay attention to. People are sort of jumping on board here. A lot of the bears throwing in the towel. A lot of people who were thinking we were in a correction is now jumping onto the bull side of the equation. So you need to be a little bit more careful here from that respect. Let's go ahead and look at what's taken place. In fact, before I do that, let me just make sure you've got full-blown positive trends on all three time frames, and momentum is positive in all three time frames. The volatility on the daily has now moved to neutral. So we're going to look at that right now. If you notice, we've got an average true range line that's been dropping and trending to the downside, but now we've kind of worked sideways and we are currently above the moving average and the moving average is flat. So that's neutral. If we move up and we do something like this that causes this line to stay above the moving average and the moving average to turn up, that would turn it negative. So it wouldn't take very much. We keep this volatility high for another 2 or 3 days, and this is going to turn to the upside, and that's going to increase the risk of a potential break of this 18-day. And I think if we break the 18-day, then we have a little open air before we reach the 18 weeks. So that's what we're talking about. We are not talking about the start of some crash. We're not, the underpinnings of the market right now, especially when you look under the hood and you start to look at what's taking place on the individual stock basis. The risk we have is that we have some really extended big stocks. That's really the concern. Those stocks that are extended, big stocks that have moved up. but there's a lot of other areas that have pretty attractive patterns that aren't overbought right now. All right. But the key thing is that we're below a declining moving average on this time frame. So even though the volatility is going up a little bit on the daily chart, it is not changing on the weekly. All right. So we're in a position, when we're in this type of position, even with the divergence and everything, I would sort of assume we have support coming in underneath based on that. All right. Somewhere around the 4,600 mark for the S&P. Okay, let's get into these individual time frames. And I do want to point out that when we get a pinch play, we're looking for a 2 to 4 bar move, all right, in any time frame. If we don't have a lot of strength in the momentum, all right. Now we're into month 4 now. All right. So we need to be kind of on the lookout. This is another reason why we should be on the lookout based on what we're talking about before. We've got increased sentiment. We've got an RSI divergence above 80. Something, and we're getting closer to the 5,000 mark. So just we want to be, these aren't the type of things that we act on. All right. These are conditions that are in place. We don't have a setup per se. We have to look for signs of problems developing. And right now, there really aren't any yet, but there's some things developing on the short-term time frame that I'm going to point out in a minute. So if we go to the weekly, we have this big run, again, somewhat extended. Could we pull back? Should we pull back? Absolutely. We should definitely look for some kind of a pullback. But the momentum is confirmed here. And we made another lower high and another lower low in the sellers, and we made another higher high and a higher low and a higher high in the buyers. So we don't see any signs of trouble on this time frame. MACD is doing what it's supposed to do after coming down to test the zero line. It's moving up with price, exactly what we want to do. We don't want to worry about this relative to this, even though it does look like it's at a new high. That's not really the divergence we'd be looking for. We'd be looking for a pullback and then a new high. And if this diverges, then that's where we'd get concerned. Now, if we go to the daily chart, again, we got a pretty good look to this overall. We had some issues here, but we had some reverse divergence develop, and we had what looked like a contraction pattern developing that didn't last very long. And we immediately broke out again with green DI kind of kicking into gear with this move coming back to the upside. So far, so good since that started. We're moving up. Now, if we make a new high again here and this makes a lower high, then maybe we have to be a little bit more concerned about that. But right now, I don't have any real concerns about what I'm seeing. The moving average environment still looks pretty good. Price action looks okay. Had a big bar to the downside and we erased it all in one day. From that, I'm somewhat encouraged. Now, if we look at this, and what I've been saying to my subscribers is the 18-day is kind of the key here. We broke the 18-day twice now in this move. We didn't break it here. We broke it here, but if you notice, it kept rising. It never rolled over. You see that? And then we broke it here, and it never rolled over. So if we break this, we're looking for this to turn down. Now, one of the things we want to be on the lookout for is on the hourly chart. First of all, we want to look for signs that the momentum is dying out. And, we saw some selling show up here. I mean, this was based on the sellers. So we did get a little bit of selling here. However, I threw the zigzag on here just so you can see what is taking place. So we did get a reversal back here at the beginning of the year, and then we reversed back to the upside. We broke the downtrend, turned up. We turned the trend back to the upside, right? A 1, 2, 3. This is the 3. So we made our 1, 2, 3 to the upside. Now, we went and made a new high here and then a new low. So that was a break of the trend line. I mean, that was a break of a prior low. That was a trend line break, and that was it. And then we just turned right back up and went to a new high. Now, we're doing this break of the trend line. We've come down. If we come back down through here is where we have concern. You see what I mean? Like if we come back down through here, what's going to be happening is we're going to be breaking the 18-day. So that's the first sign that you'd have a concern. But you don't really have enough evidence on a momentum basis to jump the gun and look to be shorting or selling or anything like that into this rally right now. It's too, like the momentum signs are still good enough. And if this turns right back around and hits a new high, then you start the process all over again. You draw in a new trend line, and then you're waiting for that to break, and we're looking for a 1, 2, 3 to develop. We have to wait for a 1, 2, 3 on this time frame because everything looks good on the upper time frames. The only time you're looking to play the 2 on the smaller time frame, meaning look for this to turn down and get a hedge on or short or something like that, is when we have problems on the daily chart, right? And the only time you'd look to get early or premature signals on this time frame is if we have problems on this time frame. But we don't really have that on any of the big time frames right now. So based on that, I think we have to let this break this low, see if the momentum starts to shift, see if this turns the 18 to the downside. And then if that's the case, that's when we start to get a little bit more concerned. We have increase in volatility starting to show up, but it isn't enough. It isn't enough yet. It hasn't turned negative yet. We've had this happen a couple times where the volatility looked like it was jumping and then it dropped right back down. So see if this can hold this low or if it wants to break out again. And that'll be our first sign, something we really want to keep an eye on. See what the momentum looks like. I think if we take out that low, we take out the 18, and certainly if we turn the 18 to the downside, then the risk really starts to increase. So those are the keys to keep an eye on over the course of the next week or so. All right. Let me know if you have any questions, and we'll see you next time.